All right, hello everyone and welcome to this live intraday strategy session on SB Trade Desk. Mike Boutros with you here, guys. Good to be with you this morning. Chris, Philip, Joe, Mark, Terrence, Tuttle, Willie's in the house. We got a big crowd today. Good to see you guys. So let's jump right into the charts. So I want to follow some of the scalps that we've been taking. I've been heavily involved in the Aussie, Euro, Oz setups that were featured on last night's trade report for the intraday. Got a little involved in the Euro yesterday as well. We were looking at that here in the webinar. But before I do, I just want to take this question here from Joe Devine. I really appreciate the feedback, man. So Joe is saying, I know it would be beneficial for me if you could actually do a live scalp during the Tuesday, Thursday sessions. I think it would be a great clarity to your approach, mindset, and techniques as we go through the motions. Completely agree with you, Joe, and I wrote you back a response on that. Just wanted to say it to the room as well. Guys, we're not necessarily prohibiting trades here. If something pans out during this time period, I'll be more than happy to jump into a trade with you guys. No reservations. It's just important that we keep in mind timing, right? So typically the opening range for the U.S. is what gives us that directional bias. So typically we're not really executing trades until, the U.S. Open, 9:45, 10:30 type of atmosphere. That being said, if something presents itself, for sure, Joe, we'll be more than happy to take it here. In fact, if you were in yesterday's webinar, that Euro Oz long was actually triggered right there. We missed it because we were going over some of the Aussie setups on the other side, but we'll definitely always keep our eyes peeled, Joe, for setups as we go through the session. So for sure. Philip, great to see you. Permendra, Joe, thanks again. All right, so to start off this session, you're seeing the dollar taking a little bit more of a back foot here. Here's the Aussie dollar with a 0.96% rally, followed by the sterling, which has just been ripping higher. Kiwi up 0.56, Com Block doing pretty well. So the Aussie CPI data yesterday, a little bit stronger than expected on the trim mean, which is going to be equate to the core here in the United States. Headline figures year on year largely came in line with expectations. So before we jump into the Aussie setup, here's what the dollar index looks like to start off the day. Again, remember, the major key resistance is 12,071. We talked about this yesterday. It looks like that trend line off of the March highs is holding for now. The major key support we still need to clear to the downsides, just shy here, 11,954, 11,951, and that's really what we're looking to see the break to validate the near-term turnaround in the index. So looks pretty good. Momentum sitting at 50. You got a trigger there in and of itself. That would be the first 50 break we've seen since June, and that charged the near-term recovery as well in the dollar, or near-term correction rather in the dollar. So the index hasn't changed. All the levels are pretty clear, and we're still looking to see if we can get that final push there below the opening range low for April. On the scalp side of things, so before we move on, we need to make sure that we're being cautious of the dollar as we come into the support, okay? Because there's no validation of a break yet, and if you're targeting some of the dollar shorts on the crosses, you want to be mindful of the index. Jumping right into the scalps, here's what Aussie dollar looks like on the daily. So of the four setups we were in yesterday, the Aussie was actually the only loser we took, and that was on the basis of I tried to fade that move on the back of the CPI number. So the game plan that I was talking with Jamie, and Jamie's still on the same kind of page with this, guys, as far as the Aussie turnaround. I'm still not buying a full-on breakout here yet. I do still think this is at risk. Long story short, here's how we played it. So obviously looking at the daily chart, the major thing that you want to keep into focus was the operative pitchfork or median line formation that we're in. We were coming into support at 77.09. Also represented the turnaround day. So if you take the March 12th reversal day, the close of that session came in right at 77.09. That was really darn close to the close lows for February and a nice pivot in price. And that came in just in line with that trend line support. So we were expecting to see a little bit of a pop on the back of that release as long as it wasn't weaker than expected, which would suggest that you'd see the RBA have to move forward with additional easing. Long story short, we're not playing the data, we're playing the reaction. So while we're in the confines of this formation, we were still looking lower. That formation broke, gave us a topside pop. Okay, so here's what yesterday's chart looked like. And this was on the back of the CPI read, obviously. Took you right out of the formation. The trigger that we were talking about in the report as well on both sides gave out on the resistance side. If you're not holding shorts, this was a good long trigger. If you were holding shorts, this was your sort of heads up to go ahead and duck out of that trade. So the position we took was a short from right around that 77.85 level. Now remember, you're only looking for about 25 pips, so that's the allottage on the stop. We can't go out further than 25 pips. If that's what we're going to be targeting per scalp, that's what we have to limit as the loss. So literally it was like 3 pips out, and it got stopped on that run, and then we got another push higher. Actually, the entry was right before this, and I'll show you on the 5-minute chart exactly where it was. We jumped in on this pullback here, as you saw a momentum trigger give out on the 5-minute. So here's what the live charts look like for the Aussie. Okay, you saw some divergence into the highs. Remember, I always warn you guys, these divergences in overbought territory are extremely weak signals. That's not why we took the trade. It was the 70 break here that suggested you might get a little bit of a pullback looking for 25 pips. Well, you didn't. Okay, materialized, couldn't get through 60, and then you got the topside trigger. Had I been up, at 1:30, 1:45 in the morning, this would have been a nice exit to trim the loss to maybe 10, 15 pips. That being said, we took a 22 pip stop on the rally, and literally on the top of that peak, we got stopped out on that scalp. It's going to happen. You're not going to get one you're not going to hit a home run every time. The one thing I do want to just say to you guys right now is that this is a scalp that you go half leverage in, okay, a third leverage in. Why? Because you're fading the move. You're fighting the immediate trend, which is to the upside. So for me to take a 22 pip stop on this, it's not even a dent. I'm not even going to worry about it. It's a trade where if it catches and you do get the pullback, pans out really nice and tends to pan out pretty quick. With the same respect, we haven't really gotten the clear directional break for the week. We haven't really gotten a signal on the 30-minute chart. It was maybe it was a little bit more of an ambitious trade. In any event, nothing's changed. Okay, I really do need to get below 77.70 to get back on the short side. I don't have any exposure here. I do have a trigger that's waiting. If we do get the break, stops would need to be against 78, and you'd look to play this thing back into the same targets that were noted in the report. Okay, you're looking at 7,700, and obviously 76.60 was the major key support we were looking for last night. So, of the 3 setups highlighted, not really my favorite at this point. We're kind of unchanged on the week, guys. Here's where we closed. Here's where we're trading. In fact, Kiwi dollar heading into last night was exactly there, unchanged on the week. And that's not really a scalp that you guys want to press. Okay, that's the ones that you want to kind of wait for a little bit more clarity. So not opposed to trying another stab at the short side here. I'd really need a more conviction trigger. As far as heading into the U.S. session, here's what the Aussie dollar looks like on the near term. So the U.S. opening range so far, just below 7,800. Just use that high, guys. Doesn't even matter. 7,808. And the European low, or the London low, comes in pretty tight at 77.70. So we'll be looking for a break of that range. If we get a 40 break or a nice conviction short, again, we'd like to play the short side of the trade. But just remember where your stops have to be, and accordingly, it's going to be increasingly tough to try to squeeze out a 25 pip stop here, as we're already, 26 pips off the high. Why are you not considering entering a long position, says Philippe. Good question. Well, we just looked at this, right? What did we hit today? Median line. All right? The median line off the ascent from the highs, or off the ascent from the lows, is right there. We just tagged it and came right off. And secondly, Philip, we came into the week short Aussie, right? I just want to take a step back. We came into the week with a technical outlook looking to sell rallies. That was on Sunday's post, right? That's sort of the game plan coming into the week, was looking for a rally to sell. So what has changed, Philip? The invalidation level is 77.70, 77.60, what we're doing right now. I'm not going to say that a 20 pip pull up here and a pull right back is going to validate the break. This could easily be a false break, right? I would consider a long, Philip, if we opened the range and broke to the upside. 78, your next target up here is going to be 78.40. A stop against 77.80 might be a nice play, right? But right now, nothing's changed. The CPI print from last night is not going to change my overall view of what I'm looking to do on the trade. Does that make sense, Philippe? And that's the flexibility of intraday trading. Do you know what I mean? If the opening range breaks to the upside, momentum holds 50, you get a topside trigger, sure, let's play the long. We're bound up into 78.40. But, nothing's really changed. This was the bearish invalidation level. If we had blasted through this and came back, checked it as support, and moved off, it would have been a much more conviction trade. But as it stands right now, and I'm not ready to call that a break yet, we're still straddling that region. So I hope that offers some clarity. Philip says, I see. Yes, thanks. All right, cool. Right on. Yeah, Raj, we'd definitely go over Euro Oz. That was a beautiful trade, actually. Even though it's trading much lower in this session, the long position played out beautifully yesterday. All right. So any questions on the Aussie dollar heading into the U.S. session? Okay, we'll be looking to see if we can get, and there's a trigger right there, okay, Philippe. Not necessarily something I'll be looking to take unless we clear the London high. It's really, this is the range that you want to focus on, guys. This is the London right now. The U.S. being embedded in here is not going to give us any clarity. All right, so let's segue real quick since, Noob, how did you, hey, Terrence, he says, how did you form the two red lines, Michael? Which red lines are you looking at? These lines here, Terrence? These retracement levels? Or these? So this is an indicator called Trade Sessions. You can get this from fxcmapps.com, and it allows you it'll automatically highlight the high and low for each session, not the opening ranges, guys. It'll keep moving up as the market moves up, but it'll always highlight the high and low for each session. Really nice on the intraday, real tight charts. This retracement right here that you see in red, this is just a basic retracement from the decline off the March high. Okay, and you can see that 618 right there, with a nice pivot in price, with the 764 actually catching the exact high confluence with the upper median line parallel. Terrence, does that make sense? Just a basic retracement. Fib lines, yep, you got it. Fibonacci. All right, so I'm going to segue real quick into, Raj says, are you and Jamie still long on Euro Oz? I know Jamie has taken profit at 141. I'm flat. We were in a long position yesterday. I want to go over that with you real quick. So here's the setup for Euro Oz. It's been beautiful. I know that's, again, the basic premise was 37.88. Let me bring that chart up real quick. So here's what the daily chart looks like. We're testing key support right now as we speak. What's important about 37.88? It is the low day close, so the low for the year that's been made. Here's the 2015 open. The low, the close of that session was 37.88. You've seen clear-cut conviction. Okay. Interestingly enough, it was also really darn close to that low that you made in September. And on the stretch that the low day made, you went right into a nice median line here. This is just a mirrored slope of this trend line. And that literally caught the low exactly. Here's the operative median line formation. That median line was right there as well. So the rebound here is what we've been playing. Momentum is still holding that trigger we've been looking at since last week. So that's something you're going to want to keep in mind of. And you're right back at support. If this is in play, this formation, well, that's there too now. So there's a lot to look at for Euro Oz. Here's how the trade panned out last night. So if you guys remember, we were right here during yesterday's webinar, 8:30. Do you remember? And we were looking at the 1-minute chart, and I was speaking to you guys. I was literally saying, I think we're missing the trigger. It was a beautiful trigger because it did play out. We're not going to chase those. We're way too, we've been doing this too long to try, to get in that trap. But it would have been a beautiful setup nonetheless. The opening range for the U.S. broke right on cue at 9:30. It was a clear-cut conviction trigger and momentum, and you got a really, really nice rally. Remember, much wider range scalp. So always when we're looking to play these setups, guys, always take a minute. What's the ATR? What should I be expecting? Okay, as far as profit targets, volatility, and the like. So 43 pips. You got the rally from 38.50 essentially into like 39.30. So you had plenty of opportunity to grab those on the way up. And this thing teetered out right into the close of U.S. trade. Here's what the scalp looked like yesterday. Okay, this is right ahead of CPI. I literally was writing this guy, and I posted this like 20 minutes before CPI. The print obviously prompted the drop right into key support. And on this drop, the long was initiated for the scalp. And I'm going to show you the trigger in a moment, guys. This was a huge level of invalidation because, again, on the near term, very similar to looking at the daily chart, you had that formation right there. You had a much broader median line slope that we've been watching that caught the highs here, consolidation, we're right there again. Okay, and the stop, very simple, is against the major key support, 37.88. Here's what the 5-minute chart looked like. Okay, so I don't want to get, well, I guess I can if you want to. Let me know what kind of questions you guys have. On the entries, this is something I don't typically talk a lot about in the webinars. When you're doing a move like this, guys, and we're fading data, okay, we're looking to play the opposite side of the emotional reaction to a print. You want to be nimble on the entries. So you see 2 entries here on the lows. The first one, again, was like the Aussie. It was a half entry of what I typically would take on a trade because we're fighting the trend, right? I don't know if this pullback is going to extend right through and blast through 37.88 or if it's going to find some meaningful rebound, right? All I know is that we're reaching a critical point in price and it's a major, major area of support. So I'll take a stab with a half leverage, okay, against the 37.88. On the rebound, then we got a trigger, okay? And when you get the trigger to the upside, again, these deep triggers in oversold are not going to be your strongest, but add validation to the notion of the reversal. Bring it into a 1-minute chart. I know we're getting super granular here, but I think this will help. Looking at this here, again, this is what we're actually targeting when we're entering. That's the old trigger. Whoops. Oh, I'm sorry, guys. Bear with me one moment. Okay. So on the trigger, right, you had some divergence again into these lows. We pressed that against 37.88, so you're basically working with like a 15 pip stop, right? On this pullback here, look what happened. You made a new low, thing jackknifed right through, and then you got the 30 break in momentum. Typically, will be a trigger in and of itself. So that validated at least a better probability that we're going to see this hold. You then tacked on a quick support line, and as long as that support line holds in momentum, you hold the trade. Now on a trade like this, again, now we're in at full allottage, right? What we typically will take per scalp, as far as whatever amount that you're trading with, that's completely discretionary. Where's the target? Well, we're looking for about 43 pips. We're looking for 40 pips per scalp, so I'm looking for a 40 pip stretch. My stop is very tight. Once we got above 30, you choke up the stop to right below this low, which is now going to define the Asia and Aussie lows, opening range lows. And as far as the target's concerned, just tack on a quick retracement. What's your first retracement? At the allotted amount, 40 pips. Well, 38.2 comes in at 38.47, and literally, that's where the trade was booked. So a little run through here on how we want to trade the event risk, even though the market's coming off as a perfect example of what we were talking about yesterday. There's still opportunity, guys, to play the rebounds, to play inside these nice tight ranges. Now, the break to the downside here, let's follow price action what we're going now, was a clear definitive move of the London opening range low. So if we take the London open here in green, London put in a low right around 38.12. We check the opening range high. You're doing nothing. You're doing nothing. You're doing nothing. Wait a minute. Break of the London lows. This is not the right RSI. Let me get RSI 2 on here. It was accompanied with a break below 40 in momentum for the first time this session. That's something you want to operate on. Okay? And again, that puts the focus right back on the short side, looking for 43 pips, and you'd be out by now at this point on the downside. Or just about. You're still looking for a little bit deeper of a pull, but again, we're at 37.88, so I wouldn't really be looking to hold any shorts beyond here, guys, unless we get a definitive push lower. Questions on Euro Aus. Mark says clear divergence now on Euro Aus. What time frame are you looking at? So I just want to be cautious about calling a low in divergence, Mark, excuse me, on one thing, man. Remember, you need to wait for the close of the candle to ascertain divergence, and you never want to call a low when the market's doing this, because this candle can easily extend and the divergence will disappear right before your eyes. So I wouldn't necessarily call this divergence just yet. If this candle closes and we see another candle formation here and you see a point, that's okay, but you know, that's a tough one to call divergence right now. On the intraday for Euro Aus, this is divergence, okay? So if we look at this 1 minute chart, which again, we're not going to stress these real near-term divergences, because if you start doing this, guys, you're going to find divergence everywhere. But that is an early indication that momentum is waning. Let's take it to a 5 minute chart. Wait a minute, the 5 minute chart's showing something similar. These lows are pretty equal here. And if we take this into a close basis, it looks like the market's making a lower low. Right? Equal lows. So sure, there is some divergence on the real near term. Are those things that we're willing to necessarily operate on right now ahead of the U.S. opening range? You know, I'm not sure that'll be something I'm interested in, but at the outset, guys, right now, it doesn't even matter. We're still looking higher above 37.88. So I'm looking for those long triggers already. I just don't want to jump in something too early. And then actually the trigger that would have played out right here, guys, was right here. What is about 20 minutes ago. That would actually have been a long trigger again. So 30, let's call it 38 near-term resistance. Let's see if we can get that topside break there on the Euro Aus. In any event, we're looking for long triggers from these levels. So actually, I do like this here. Candle closes. I always forget, says Mark, on the 30-minute. Raj says, so you think it could be a good level for long entry? It could be a good risk reward, very tight stop. Absolutely. Yeah, right here, guys. Let's see if we can get a trigger out of this. I really don't like taking trades just based on that merit alone. Let's leave this here. We'll leave this here and see if we can follow it. We'll see if we'll take a position right on that. Let's load it up. Okay. All right, so that is the Euro Aus. We'll see if we can take a position here together right as we look at this. Euro Yen is definitely something that Jamie's still very interested in as well on the Euro crosses. Euro Dollar, like I said, here's what the Euro Dollar setup looked like yesterday. This wasn't, I'm going to leave this chart so we can follow it, because we missed that entry yesterday. Oops. All right, we'll keep an eye on this one as we go through these setups. But looking at the Euro Dollar setup yesterday, again, we didn't necessarily, this wasn't necessarily on the intraday page, but on the back of the rally that we saw deep in U.S. trade, it was like noon. I don't know if you guys noticed this rally. Really nice trigger on the rally into the upside. Not only on the near term, but also on the 30-minute even. So here was the 5-minute chart. Oops. So as you were coming into the U.S. highs, a beautiful trigger gave out right there, okay, on some divergence. So price action, higher high, higher high, higher high, the oscillator, equal highs, lower high, one reference point above 70, one reference point below 30 with a 3-point trigger. That's something that you'll take 9 times out of 10. Really strong risk to reward. Literally on this one, you had like a 13, 14 pip stop, and you just let it fly. You know, you're essentially looking for the Euro Dollar. If you take the Euro Dollar, you're looking for, what was it, 30 pips per scalp? And this is what the scalp looked like. And the reason, one of the purposes or the justification for trying to get on the short side of that trade was just the median line resistance. Okay? So it was a pretty nice trigger, and we jumped into that one again. You're looking for 34 pips. We ended up closing up 43 pips. Again, this was actually last night, guys, as it was teetering out. Momentum was below 30, which was very exciting because I thought this was going to get another leg down. Once we cracked right back above 30 on even a 1 minute chart here, I think is what took me out. Remember, I was actually chatting with Jamie during this last night. I thought it was kind of teetering out as we came into this support structure. Okay, and that's right around 107.16. So we're testing that support right now. If you do see, again, that topside break, we'd be looking, or if we do see that downside break, you could get a deeper pull into this region now at this point, is what would be support. But largely speaking, you know, I'm just not really a fan of getting too aggressive on the euro. That was kind of a real nice fade move to the downside last night. Stefan says, is there a time of day when the strategy is most successful, maybe based on volume or volatility? So Stefan, my favorite times for these kind of setups is on the crosses. So heading from Asia into Europe actually has been the most fruitful. Over the last couple of weeks, U.S. has gotten some really nice setups just because of the volatility that we're seeing, not only because of some of the headlines we've been getting out of Europe during the session, but also last week was a really big week for U.S. data. You had a lot of different event risks on tap. So those are the times where you'll see the market volatility really start to surge. But Stefan, the crosses are typically what I like, and then after the opening ranges. So you open up the first couple of hours of Asia trade, like last night. If you guys, we can always just look back on the trades and see, you know, the best times that we entered. So here was last night. This was an entry at 21.45. So late last night as we came in, Euro Aus came into that key support. This was on the back of a data print. It was around 8:30 last night, or 9:30 rather. On the Euro setup from yesterday, that's not something that's very indicative or happens too often, okay, where you get a noon entry. I remember this specifically because it was a random time of day for the markets to put in a major high or low, right at lunchtime. Which even makes you much more speculative of it and much more comfortable fading it when you see something like this. So typically 12 o'clock in the afternoon is not going to be the best time, Stefan, but definitely the crosses early in the sessions as the opening ranges are breaking, that kind of mid-session stretch, Stefan, will typically be my favorite. How do you get the ATR figure, Michael? Terrence says. This is another add-on indicator, Terrence. You can find this on fxcmapps.com. It's called ATR in pips, or ATR pips indicator. And it basically allows you to put the ATR as a multiple here on your screen instead of looking at it as an oscillator. Because I don't really care so much, per se, for what the ATR has been. I just want to know, I'm looking to jump into a scalp right now. What's my profit target? Typically, we're looking for a quarter of the daily ATR. So if the daily ATR is 100 pips, we're looking for about 25 pips per scalp. Stefan says, 4 a.m. Eastern is Europe is the prime time for you. When do you sleep? I don't always get to trade it, Stefan. I'm just telling you when the best time that these setups have been playing out. I mean, guys, obviously on the intraday page, there's 8, 9 setups, including the radars here. So I'm not involved in all of them. But it's just been the times that they've been playing out the most, And trust me, it's frustrating, but what are you going to do? We take what the market gives us, right? And at the same time, guys, again, you want to cherry pick whatever gives you the best trigger. Sometimes we'll have a day where we're 15 pip scalps in. Sometimes we have days where we haven't placed one trade. It really just depends on what the market's given us. I haven't gone over the pound yet, Eileen, and I will in a moment. But Petro, I want to take a good question here. So Petro, great to see you. Says, hello, I wanted to ask you, what are you usually looking for on the daily signals that would make you look on a smaller time frame? A break of important levels on a closed basis, the price between important fibs, looking for opening range breaks to get into the trade. What kind of question? Stefan says, great question. And you know what, Petro? We can talk about that for sure. It's the hardest thing. it's the hardest thing, guys, to know early in the week. Sunday is the hardest day for me when I'm doing the post on SB because you're kind of wondering, where should I shift my attention? Great question. The thing that attracts me most, or the thing that will make me even start to drill down into the tighter time frames, is where the daily chart is relative to trend. So you hit the nail on the head, Petra. I don't even think I need to answer, man. I think you know the answer to this. It's trades that are at major key support, trades that are at major key resistance, trades that have invalidated the monthly range. So the monthly opening range just broke to the upside. Let's see what the near-term chart looks like. Trades that have clear structure. Not going to be looking to scalp something like this. You didn't see us talk about sterling dollar when we were doing this into the close of the month. In fact, this completely fell off the radar completely. But then once we opened up the week, once we opened up April trade, and you got that drop again into the median line, now it came back into focus. Sterling is probably the worst example, but just to show you, looking at the Kiwi dollar. Wasn't really a major focus for us as we were doing this. Last week it came into focus as we blasted through the opening range high, coming into the median line. That's why we opened up the week trying to look lower. Momentum at 60, right? Even something like sterling CAD, you'll never see me talking, too aggressively about sterling CAD. This was a piece I put out on Daily FX yesterday. Looking at the major key support rebound that we're making. The actual bias on yesterday's report was to the downside below the 84 handle as we hold this median line. That got invalidated pretty darn quick. And we're looking higher, looking for that stretch into 84.80. So you want setups that have technical clarity. We see it's very clean levels. It has structure to the advance or the decline, and it's reaching a critical point, either major support or major resistance, a major trend line, a longer term, moving average. Does that make sense, Petro? Then once we have a little bit more of a clear picture, now once we have a gauge of where the market is in trend, then you start to zoom in. Sometimes it's just literally thumbing through your charts. Sometimes what I like to do also is, if you just go on any terminal, if you have a way of gauging volatility, you can just take a look at the ATRs. Look at a pair that has 150 ATR on a daily basis is typically my sweet spot, or 175. Even a pair that has a daily 100 pip ATR is still doable, but I like to give myself some room, right? So sometimes that strays us away from the majors. So be it. My point to you guys is this. I don't want you to stress necessarily the pair. I want you to stress what the market's doing, the structure of the price action. I'll trade seashells, okay, if the seashell chart is clear, okay, and there's technical clarity to it. The levels are clean. I don't care what the asset is. Obviously stocks is a different game, but that's sort of the take. Petro says, I want to get to the next level of analysis. Smiley face. Yes, I got it. All right. Cheers, mate. Okay, Euro Oz looks like it's challenging that high. Lows 37.77. Okay. So here we are. Yeah, we'll be on the lookout for long triggers there. 37.88 is the invalidation level. Might be worth a shot here, guys. So we're going to just go ahead and jump into a near-term position here and see if that gives us any plays. Where is the it's running. All right, wait for the pullback on this one. You'll get something, and then we'll take a long position. Remember, the only thing I want to look at here that I'm waiting for is this 60 break in momentum. If we hold momentum, it could be a situation like this. You saw the same exact thing yesterday. What am I saying yesterday? Today in European trade, you made that high, you came back, you made that high momentum testing 60, and then actually a momentum trigger gave out, and it fell right off. So let's see if we get this 60 break here, but I am looking to take a long position there against that low. Are we back at the handle? Yeah. Okay, We're going to jump right in. Stop against the low right there. It's already set. So guys, you can also do something on trading station that allows you to put an auto stop. It's very helpful when you're scalping in that it'll automatically drop the stop X pips away from where the market, from where your entry is. So I have mine at a standard 25 or 23, I think. As soon as I jump into position, it's going to put a stop 23 pips away, and then I just need to drag this and drop it to adjust it to where I really want. So it's great when you're intraday trading, especially if you're using event risk as a catalyst, because as soon as you jump into position, the market starts to run, you know, you're already set. You have nothing to worry about the trade getting out of hand. Remember, risk management is paramount. The first thing I do when I jump into the position, the very first thing, where is the market invalidating my idea? Where, if the market moves against me, am I just going to duck out of this thing? So you need to make sure that you have that level already set. And again, the stops is going to be paramount on this. So we'll see if we get that 60 break. We might have front run that a little bit, but it looks pretty good. And again, because of the critical nature of the threshold that you're at, might be worth a shot. It's a pretty tight stop. Where is Euro Aus? All right. Now, where's Mark? Now, my friend, we can call this divergence into the lows. Do you see the difference between what we were looking at earlier and what we're looking at now? A defined point. We closed that candle. Now that's a reference point I can use as divergence. On the way down, I don't know. And you're probably saying to yourself, well, Mike, couldn't we have gotten a better entry, like 8 pips lower? We could have. But you can't think like that, because if you do, you're going to completely, it's just a wrong mentality. I'd rather forego some entry and have a better conviction on the entry and a better conviction on the stop than front run a trade. And that's just, I've learned my lesson year in, year in, year in, and year out on something like that. All right. I did enter lower, but I understand it's trading with eyes closed and praying. Yeah, Mark, don't get me wrong. A lot of times it's going to work out for you, man. But a lot of times if you do that as a habit, you're going to end up jumping into trades early or jumping into trades that didn't have a proper trigger, and then it just gets stopped out. It's just a habit, Mark, that you might want to take into consideration. All right. So we'll see how that one pans out. Looks like we got the 60 break in momentum. So once this thing comes back, guys, if we come back into 38 and it starts to hold support, at that point we can bring our we can start to sneak up our stops. Not really looking to take profit until, let's see what the near-term target should be on this one. Remember, quarter daily TR is 43 pips. So this is just done. I just want to show you that example. A couple things I'll look at. A, you're always going to look at just that basic retracement of the last stretch. So something like that puts 38.06. Ooh, that's pretty close actually. Actually, we should leave that 236 and that. Okay, this is sort of the sweet butter zone I'd be looking for in U.S. trade, at least on this initial scalp. Remember, just as a disclaimer, the what's the word I want to say? The likelihood or our base case scenario is for a much stronger extended rally in Euro Aus. Remember the daily chart. And this is, again, why we look at these setups to begin with. We're at a key juncture, any way you slice it. Okay, this is a 50% retracement, multi-year retracement from the lows that you made back in 2012. You had that median line, we talked about that, basic trend line support, all that, and the low day close stacked up here. So initial targets, we're looking for, like I said, 43 pips or so. But initially, this is sort of the first zone you'd start to look at for resistance. Okay. Stefan said, do you enter that trade at market or limit? Most of the scalps will be market. The exits will be limits, always. Not always, but 90% of the time. But yeah, the entries will typically be. Mike, how do you define the target on the Euro-Aus setup? So the targets are all provided for you, right? Those are the levels that we'll be focused on. So on the upside here, I know that there's nothing in the weekly range as far as targets are concerned, but let's go ahead and just amend this chart for that reason. So we'll go ahead and highlight this section right here. Near term, this is going to be the critical support. Yeah, on the upside, I would still work with that 5-minute chart. Okay, so on the upside right now, the focus would be on the 618. I'd be looking for a stretch into 38.25. Yeah, 38.25 on the initial stretch right here. And this is going to be the first test. So on this one, Raj, because we're coming off this critical nature, as we head into 38.25, maybe we'll chip off a quarter of the trade and bring the stops to break even. And then if you get the vault or you get the breakthrough, just look at the basic retracement off the highs. See what that looks like for the week. Again, we don't have any validation. This is a low yet, but because we're in the trade, we're gonna scope that out. 38.90 would be the level I'd be looking at. That's actually pretty darn close to last week's close. It's the 618, and then it's the session low that we made right here into the close of U.S. trade on Monday. So that's a nice level that you'd start to look at. You can see if you look to the left, some really nice pivots in price as well. All right. Again, we'll follow the progress of this trade. If we get into 38.25 and it starts to fizzle out, like I said, this is where I'd start to look to bring in the stops a little bit. That's the critical thing that would put me back on the long side. If you guys, again, this is technically would be the bearish invalidation level. Would be a break below 37.88, or the bullish invalidation, excuse me. So if we do move below that, this thing is going to fall apart. Okay, you're going to see a drop probably right into 37.20, 37 handle. So the levels are really clean. We'll see if we can get some more upswing on that trade. All right, Stefan says, gotcha. Do you have a time period where you would call off a trade once you're in it? Like if it doesn't work out in an hour, stop it out. Good question. I'm not really a fan of second guessing your analysis, because a lot of times you end up jumping out of positions that were profitable. But a great trader on a desk that I worked with for years and years and years said one thing to me that resonated for me for a long time, and I kept on thinking about it. And he would say, listen, when I would get into a position, if the market doesn't, it's a vague statement, but bear with me. It says if the market doesn't do what the expectation is within the reasonable time period, then you need to duck out. And that stuck with me for years because I never knew what the hell he was talking about. Wait, what's a reasonable time period? I'm a near-term trader. Reasonable time period for me is an hour or two, whereas this guy's trading on a position for 2 or 3 days. So, Mark, instead of taking that approach as, oh, nothing's happening and it hasn't worked out over the last 2 hours, so I'm going to duck out, I take a different approach in that I need something to refute what I'm expecting. I need something to refute it. So, Stefan, there's nothing wrong with jumping out of a position if the market is telling you, is giving you an indication that, hey, watch your back. What does that mean? Well, I'm in a short, let's say, and a resistance trigger gives out, right? Well, price might not have reached my limit, but resistance is giving me divergence. It broke resistance trigger, which would typically have me looking higher. Well, probably going to jump out of that, right? So that's one thing that you can use, Stefan, to sort of correct a trade that may not be working out in your favor. That being said, I'm typically a fan of taking the position. If the entry was sound, you have your stop, you have your limit, let the market play out. All right? And that's another thing, guys. Remember, the entry on these scalps is the most critical thing, especially if you're trading with a little bit heavier of a leverage. It's that initial entry. So if you need to stagger the entries because the conviction isn't there, you want to wait for the trigger, go ahead. Take a little bit of a smaller position initially, then add to it if the market starts to move in your favor. I'm always a fan of adding into winners, guys, not losers. It's a complete misconception of fading into a move. Someone who thinks this is bullish, buying here, and then holding the position, then buying more down here. It might seem like a genius move when the market rebounds, but boy, when those break, your losses are compounded, are exponential. So we got to make sure that we keep that in mind. Chris says, this subject comes up a lot in the trading room. I'm a member of, he says, my take on this, has new information come to light or something you missed? Right, Chris, great point. Yeah, those are two things that would also shift things. Has something new developed, or is it something that you've missed? The something that you've missed, I would just be very careful, because in my experience, I found that if you get into a position, guys, and you sit there and examine it and watch it tick by tick, you're going to start to see stuff inherently. It's just the human nature. You know, oh man, I missed this. Oh, that actually on a 4-hour it looks kind of bearish, but the 2-hour looks pretty good. So you don't want to overload yourself, is what I'm saying, Chris. The purposes of taking the trade, the justification of it is there. You take the trade, let the market play out. Tuttle says, good morning, Michael. With a break of the RSI in the 5-minute lead, did you jump out of the Euro-Oz position? It's a good question. I don't think I'm going to be jumping out of this position based on this one, no. And I'll tell you why. Because the probe to the upside actually was the highest RSI stretch that we've seen so far. So on this one, a 40 break would be more inclined to take me off of the trade. Does that make sense, Tuttle? I got my stop and play. As soon as we break 138.08 and move into that next target, I'll bring the stop to break even or something, and we'll see if we can get the stretch. But I don't think this is going to be an operative trigger for me now, no. This is a 1 minute, by the way. Let me see what you're talking about in the 5. Yeah, we don't even have a clear-cut trigger on the 5. If we take the low in price, that trigger still has a ways to go. On the 5 minute, yeah, because the proximity to 40. So if this thing holds 50 on the upside, then breaks 40, even if it's not at my stop, on a trade like that, Tuttle, I'd be very interested in dumping out of that position. And it's fine, guys. It's fine to recognize that the trade isn't working and take a position against yourself. You know, if you're someone who doesn't like taking losses or it really hurts, A, you're over-leveraging, or B, this is just not the right market. We're going to have losses. That's fine. We just want to make sure that those losses are trimmed in comparison to the profits that we're looking to take. Tuttle says, yes, very helpful. You're more than welcome. My chart was on the 1. I thought it was the 5. Yeah, so make sure you keep those in view. All right, so I think we beat the heck out of the Euro-Oz today. Anyone have any further questions on this? I just want to touch on the Kiwi and go over some of the radars as well. The Kiwi levels have been very clean. Again, I noted yesterday we were trading right at the open, or essentially right at support, rather, which was 76.60 into 76.65. This was the bearish invalidation level, not last night, but Monday night. If you guys remember, a break above this took us off the short side right off the bat. Now, that break was coincided with a 50 break in momentum, so irrespective, you kind of wanted to dump the short side of the trade. At this point, it just tested key resistance again. So, if anything, guys, the opening range for Kiwis is exceptionally clear, 77.26, 76.40 on the support. We need to see a break of that range to get any type of validation on this. Still looking lower. Okay, I mean, the opening range break to the downside would be a really, really nice signal. A trade that's a little tricky because actually the monthly range gave out last week, but this is key resistance. Trendline resistance off October, R1 monthly, median line, you name it, it's there. 2013 swing lows. You take the September lows right there as well, almost right on the monthly pivot. So listen, 77.20, anything sub 77 here. I'm looking for short triggers. Momentum is at 60. It'd be beautiful if this thing held 60, kissed it, and then just moved right off. It's just that, well, in actuality, I think you're going to get a trigger here soon too. Watch that. Watch that. I'd be more inclined to let it break and wait for the rebound to get short again, just because your stop would have to be, 40 pips away at this point. But I do like the short side. Let's see what the 5-minute chart looks like. Euro Oz. Or Kiwi, rather. Where is it? There it is. Yeah, so the trigger here would have given out right before the webinar. Actually, this is in a couple hours into European trade. Divergence. Did we get any? Yep. Divergence into the highs. Weak signal, but divergence. 3-point trigger. That would have been a really nice stop right against the session highs, looking for about 25 pips per scalp to the downside. And these levels are a little stale, guys. Don't mind these. So, I mean, the operative trade for me would put me back on the short below 76.60, but I'm going to let this thing clear out. Broader bias remains weighted to the downside below 77.20, 77.30. So as long as you're below this, guys, we're looking for short triggers with a 25-point profit target. Raj wants to look at sterling yen. Yeah, me and Jamie both are fixated on this thing right now. Look, the breakout looks legit. It's the first 50 break we've seen in momentum since here. Look what happened. Okay, so I love it. And look what the momentum signature did. I mean, look at that 40 hold, guys. And it's the sterling. It's a professional trader's market. You'll get these wicks, these little dips below 40 all the time. It's just what it does. And in fact, this is an objective break, not my opinion, of the monthly opening range. Okay, here's your April highs. So I think you look higher here above 79.20, objectively speaking. Now you're heading the 50-day moving average. I'm not a big moving average guy, but if you look back at price action, it has offered some pivots in price. That's what matters, not whether I trade moving averages. Go back in price and look what price has done. Have you seen some pivots? Sure. Support, resistance, support. So it might be something to keep an eye on, but let's look at the intraday chart, see if we can figure some levels here for sterling yen. So I think I took a look at this right before the webinar because I saw your question there. Chintan, was it, on Twitter? Right. So you have this near-term median line structure right here that we just broke out of. This is off the highs. And then you have an operative one here that is currently guiding price action. Okay, caught the highs on that last stretch last week, caught the lows right here yesterday, break of the median line, perfect tag of upper median line resistance. So I do think near term you might cap that advance. You also saw on the daily chart, like I said, the 50-day moving average. So there's a couple of things lining up here that might cap it. 81.12, essentially the 81 handle, 80 into 81.12 is sort of going to be the major resistance that you want to respect. And that's basically just a basic 618 off the decline. Let me show it to you here on the daily as well. What is this pound? We'll choke it up to the 764. A lot of times, guys, the com block, so like Aussie, Kiwi, will respond much better to the 786 retracement. This is just an observation over time. Especially like CAD and stuff, the 786s, the 886s are ridiculous. But typically when I'm looking to trade, I want the inside target. So the 764 has been serving us well. And if you drop that down, actually levels out with a nice little pivot there in price. So those are the top side targets I'd be looking at. I'd want to stay constructive above the initial opening range high for the month. Which is right here at 79.25. Near-term support. Bullish invalidation. Topside resistance target. All right. So if we get a stall here, we get a pullback, look for possible entry if we get a long trigger along this line. If not, another possible long entry, and if that breaks, that's going to invalidate the long side. So remember, this is why we don't just put orders, guys. We need something to happen at these levels to trigger the position. We're just highlighting what are the key levels that we'll be looking at. If we find a long trigger here, great. It's going to be a beautiful entry. And so forth. So construct the momentum signature also looks pretty constructive right now. All right. A quick check back on the Euro-Aus position that we took earlier today. Looks like, okay, oof, we did just run into it. Nice. So there's the topside break. Honestly, I would have liked to grab a little bit here, maybe a quarter of that, and bring the stops up, but I'm not going to do that at this point. We'll see if we can get the stretch higher. Again, we're looking for that move through the 618 to really confirm it, and that's 138.23. I think you'll get it here as long as momentum holds above 50 and looks pretty healthy. Let's see what the 1 minute. Right, so even that real sharp slope, right? Still holding. That's how you play it. All right. Eileen says, where would you jump in for the counter trend short scalp on sterling yen, or just wait to go long? Let's look at this. Let's look at the chart. Maybe there is a short trigger. Who knows? Sterling yen. Do I have a chart here for sterling yen? No, but we can certainly bring one up. Looks like a trigger just gave out. Interestingly enough, okay, so this actually presents an opportunity. Thanks for bringing this up, Eileen. It's going to be a tough sell. So here's what I'm going to say to this: anything you take on this, obviously, guys, this is counter trend. You'd be half leverage. I would not be interested in selling this while the 30-minute is an overbought condition. Remember, this can stay here for an indefinite time period. It's the break below 70 that would have me comfortable trying to fade it. So to answer your question bluntly, Eileen, no, I wouldn't really necessarily, with the current setup I'm looking at, with the current setup I'm looking at, I wouldn't necessarily be interested in fading this move here. This is a level I'd be interested in fading at. And by the way, for those of you newer to trading or newer to the room, fading just means taking the opposite side of the move. So if you get a rally and you try to short it, that's fading the move. You're basically trying to play the retracement. But on something like this, wouldn't necessarily be interested in trying to fade it until we're at a little bit more of a critical target. What would put me on the fade approach, Eileen, is if we get a very simple opening range break. So let's say we come back into the U.S. Open, we test the opening range high for New York, and then we break right through, 179.90 with a short triggered momentum. Yeah, trade like that, maybe half leverage short. Look to play it back into the median line. Objectively speaking, Eileen, you're probably better off waiting for the pullback to get long. Based on the daily chart, it seems like we're breaking a pretty major key threshold here. Does that make sense? It says, got it, see it, thanks. Awesome. All right. So that's the opening bell. If you hear it in the background, U.S. markets are coming online. I do want to just quickly soar through these radar trades. Listen, Aussie CAD looks really good, especially on the back of what's going on here today. The stretch just missed the major key resistance again at 95.57. This has been on the radar just because we're still in the range, guys, and it's a very similar setup in that you're testing a major key critical support, but the strength in CAD, I think, is going to limit the upside potential. So I really don't know necessarily if it's going to be something I'm going to want to press. It's a very healthy range, 27 pips per scalp. Keep that in mind. The major range that you're looking at is still what the week has put in, which is between two key levels, and that's 94.15, 94 on the support, and 95.50. The triggers have been really good. We talked about this yesterday in the webinar. That opening range for Europe actually broke to the upside. It was a really clear-cut trigger right here. Initial targets at 94.90, and there's the median line again. Just missing it on this stretch here. Like I said, 95.50 is what we're looking at as major key resistance. So it's a range play. Feel free to play it. Just be nimble. Don't get too heavy on the leverage. Again, there's no event risk from either of these into the end of the week here, so should be relatively clear as far as price action is concerned. The other trade that was on the radar was dollar CAD, and that's another one. Jamie's following very closely as well. as it's kind of stuck between two key levels. Again, very similar to the Aussie CAD. 123, major resistance. Okay, key support 120.95. That was the target from the scalp report 2 weeks ago on the break below the opening range for the month, or 1 week ago. What is this? This is last week. So this is the range in focus. Here's what the scalp looks like near term. The weekly opening range is super tight, okay, 121.80, 123, really nice. A topside break, you look to play the recovery into 123.70, 124.50. A downside break, you look for continuation. Major key hurdle, 120.95 still. So another one I think is kind of like primed, right? It's putting in a really nice opening range right below resistance at 23. Momentum is at 40. We haven't seen a 40 break yet from overbought. So again, this could be a turning point. A downside break here solidifies a much steeper correction in my opinion. Whereas a trigger break here, and you look to play this right back into the underbelly again, 24 essentially. So I'll be looking at dollar CAD as well as one of the highlighted dollar setups in general that I'll be focused on heading into the week. But definitely something that we'll keep on the radar. All right, guys, great session. I love the questions and the engagement. Keep them coming. There will be more educational material coming out. We're ramping things up on our end to get more of that out for you. But in the meantime, I hope these webinars have been helpful. Again, they're here for your benefit. So the more questions you guys ask, the better we can do. Stefan says, are there session range indicators, an indicator you purchase, or you're drawing them manually? No, they're free, Stefan. It's called Trade Session. Okay, trading. What is it? Trade Sessions. Okay, so you can get that at fxamapps.com, and that's free. These videos get posted on SB, correct, Terrence? Yes, every single one, and you'll find that right on the intraday page, Terrence. Anytime you click on the intraday page, the latest webinar will be right here on the right. Okay, and they're all archived for your convenience. The more I listen and repeat your videos, I will have your brain. Thanks very much, says Adrius. Tuttle says, this content of the webinar was the best since the service started for me personally. Wow, Tuttle, that's a big statement. I really appreciate that. Guys, the feedback is phenomenal. Again, I want to hear the good, bad, the ugly. We'll keep ramping things up. Keep that long trade in view here. We're up about 14 pips on that. We'll see if we can scratch into that 138.25 level. If we clear that, smooth sailing. I think we'll have a nice setup there. Tell them to forget it. Nobody will ever have your brain. All right, I'm ending it here. Guys, I will see you bright and early tomorrow morning, 8:30. Don't forget, at 1 o'clock Eastern, Jamie will be up with his midweek strategy webinar, and definitely he's got some great stuff lined up that he's got in view. Don't get too aggressive here into the close of the week. We're just going to stick with these setups that have kind of been a little bit clear on the levels, but event risk is really light, and overall volume has been kind of interesting. So I will see you guys tomorrow morning. Great day trading. Cheers.